Welcome to Bayonat, the heartbeat of tech in MENA. We bring you raw stories and sharp insights from the founders, investors, and leaders building the region's startup ecosystem. Today, we're doing a deep dive. We're looking at fundraising, navigating, well, these tricky market conditions right here in MENA, and we're drawing insights from someone who really knows this landscape, the seasoned VC professional, Jules Chassels.
That's right. Jules has some really valuable experience. I mean, managing growth stage deals at global ventures, think pre-Series A right through to Series B and value creation too. And now he's co-founder at Dopamine, actually working directly with founders. So yeah, he's seen funding from, well, pretty much every angle.
Exactly. So our mission here is to really unpack his observations. We want to pull out the most critical takeaways for you, whether you're, a founder trying to raise capital or an investor looking at deals or maybe just working in the tech scene here. So let's jump in. What are those fundamental things investors like Jules really prioritize? What are they looking for first?
He really boils it down to three key things. Pillars, you could say. First one, maybe the most obvious, is market size. Investors, they need to see that potential for serious revenue, for big returns down the line. If your target market's just too niche, too small, well, even a brilliant product might not hit that venture scale.
Okay, right. Big market potential. That's foundational. Makes sense. What's number two?
The team. And this is super critical, especially here in MENA. Jules actually puts it quite strongly. He says, with the right team, even a challenging market can be overcome. What they're really looking for is not just vision, but proof that the founders can execute, that they can scale, within the unique complexities of this region.
Right, right. So it's not just any great team. It's a team that deeply understands this specific environment. Okay, and the third pillar?
That's problem-solution fit. Basically, are you tackling a problem that's genuinely significant? Is it clearly defined? And crucially, is your solution really the best way to solve it? It's about, truly getting that customer pain point and offering something valuable. Jules is clear. That's got to be the starting point.
Got it. Big market. A team that gets MENA and a solution that really nails a real problem. Okay, let's flip that. What about the big red flags? What makes investors hesitate or, walk away?
Yeah, good question. High on that list, according to Jules, are dilution issues.
Dilution. Explain that a bit more.
It's when founders, through multiple rounds of funding, end up owning too little of their own company.
Yeah, and what's too little? Is there a benchmark?
Well, Jules mentions that typically after maybe a Series B, investors like to see the founding team still holding collectively around, say, 30 to 35%. If it's way lower than that, it definitely raises questions about motivation, alignment. And he calls it a major red flag, often irreversible, because once that equity's gone, getting it back is, well, really tough.
Wow, yeah. That really highlights how vital managing ownership is right from the start. Okay, what's another major red flag?
Overvaluation. Getting a really high valuation early on might feel great, like a big win. But if the actual traction, the performance isn't there to back it up, it just sets up these unrealistic expectations. Then it gets super hard to hit the milestones needed for the next round at an even higher price. And that can lead to trouble raising more money or even potentially a down round.
Okay, you mentioned down rounds. They're definitely talked about more in tougher markets.
Yeah.
How should founders think about those? Are they always a disaster?
Jules suggests reframing them. Think of it less as a failure, more like a market adjustment. His quote is, "A down round isn't the end, it's a market adjustment." He sees it as maybe a necessary reset sometimes, get the valuation back to reality, maybe shed some baggage from, frothier times and come out leaner. He also mentions that sometimes secondaries where existing investors or maybe employees sell some shares can be used. It's a way to kind of adjust valuation expectations without a formal, down round structure.
Interesting. So more like a course correction, and there are tools like secondaries. What about the cap table itself and using things like convertible notes or safe notes?
Oh, absolutely critical. And it ties right back into dilution. Relying too heavily on notes convertibles, safes especially if you do it over several rounds before a proper equity round, it can make your future ownership really murky. Jules gives this pretty stark warning. He says you can easily lose track and basically go from owning, say, 80% down to maybe 20% once all those notes convert. Because the terms were set earlier, the final impact can be huge.
Wow. 80 down to 20. That's
Yeah.
significant. So understanding those conversion mechanics is vital. Any advice on using notes then?
Yeah, the advice is generally limit them. Maybe one, possibly two note rounds max before you really aim for that priced equity round. And super important, make sure the terms are clear, consistent across all the notes. At the end of the day, investors want founders motivated with real skin in the game, and a messy cap table just works against that.
Okay, let's shift gears a bit. Did Jules talk about any MENA-specific challenges, things that are different here compared to, say, the US or Europe?
Yeah, definitely. One key thing he pointed out is what he terms the seed stage gap. Basically, there isn't as much diverse capital around in that, let's say, 500K to $1 million ticket size. Especially from investors who aren't purely tech VCs, Jules thinks, given how strong the GCC is as a consumer market, the ecosystem could really benefit from more, maybe generalist investors coming in at that early seed stage.
Okay, so a need for more variety in early funding sources. Any other big regional challenges?
Yes, the cross-market complexity. This is a big one. Unlike the US, where you can often scale state by state within one huge market, MENA is different. The individual countries are smaller markets. So to get that scale VCs need to see, startups here almost always have to expand regionally across borders. And that means constantly dealing with different cultures, different regulations, logistics, consumer habits. It adds this whole other layer of complexity that founders here just have to master.
Yeah, that's a fundamental reality founders here need to plan for, really from day one.
Yeah.
Okay, so wrapping things up, what's the key takeaway advice from Jules for founders navigating all this?
He talks about milestone-driven fundraising. Build something, hit your targets, then go raise. Makes sense. But he also says, be opportunistic. If good terms appear, don't necessarily wait just because your plan said later. Consider it. And when you do pitch, he emphasizes focusing on the risks you've already solved. Make your value proposition crystal clear.
And what about the core principle, beyond just the funding aspect?
It really circles back to the customer. He puts it very simply. Raising capital won't solve gaps between what customers want and what your product delivers. His point is, if you start with the customer's needs, everything else, product, sales, and funding, falls into place.
That's such a powerful reminder. It's easy to get lost in the fundraising chase, but yeah, it has to start with the customer. So maybe here's a thought for you, the listener, to mull over. If truly starting with customer needs is the foundation, like Jules says, how might really revisiting that core principle reshape your immediate next steps, regardless of where you are with funding or what the market's doing right now?
Definitely something worth reflecting on.
For more stories like this, subscribe to Bayanat's newsletter and stay updated on the latest in MENA's tech and startup ecosystem.